Alright, what's up, guys? Can you guys hear me?
The odds.
Alright. Alright. Can you guys hear me? Alright, so it's 9:46 a.m. We're gonna go ahead and start our trading here today. I want to make sure you can all see my screen. So the first thing is, welcome to Living with Options. The point of this channel is to teach and show people how to be able to make money off their option portfolios or off of options. It's a very good way to generate anything from your car payment, you know, 2, 3, 400 bucks to help you with rent. It is totally doable if you understand what is going on. So having said that, I'm recording my trading day. I usually trade on Mondays, and so let's go ahead and dive in. So as far as my positions go, I have a SPY option that I wrote last week for. And let me go ahead and put in my trading summary here. So this is my only. This is the trade that I still have open here, which is, oh, and it seems like it's closed, but it expires on 11/11. So if we go to the expiration date here, it should come up somewhere around here. SPY 11/18, right here, 11/11. And technically this one's still open, so I'm actually gonna go ahead and just delete this, because we don't technically know what the sale price is, right? So now that we deleted that, it should say open here. Okay. And so what I want to do is I want to be able to close this so that we have the collateral available to trade. So what I may do is I may actually increase my my bid and ask to 1 cent, which will allow the trade to essentially close out and give it a little bit of buffer, because it wasn't closing at 0, which is where it's at right now. It's completely worthless, right? I got $270 worth of premium. Let's go ahead and close this one. So we have 35. We'll do 1 cent, good for the day. It'll be a debit because we're paying that money back. Not enough shares, that's fine. Just let it update. There we go. And so it should go ahead and close. You see, there we go. 32 out of 35, 35. $7,000 released of collateral. We went ahead and closed that. So then the first thing I want to go do is just going to go ahead and update my SPY page here, just so we're all on the same page as far as what my cost basis was. So I can actually go ahead and copy this. This is actually going to be $1. This is actually going to be November 7th. And so we have a $200, you know, we've got $1 versus the 760. Well, it's not even, what is this, per contract? Yeah, this is per contract, so this is already 100. So yeah, we got $7 per contract, and we just had to pay back $1 per contract. That's fine. Profit's a profit. Would you rather hold on to $1 for a week of potential profit, or using that money for to deploy again and make additional money? So right here, this week, last week, we ended up with an $800, 3.5% on deployable funds. Not bad for a week. So let's go ahead and start our day off here for the what's going on with the market. So very important. The main thing that we have to do this week is that we have the CPI numbers. So as you remember, last week on Wednesday, the Fed raised the interest rates to 0.75%, right? That's another increase that we've seen now for the past couple months. Jerome Powell did not, you know, he was still very bearish or very hawkish in his speech. he is inclined to continue raising interest rates, at least for the near term. And so this CPI number that we have coming out this week is going to be a good dictator of how aggressive Jerome Powell is going to have to continue raising interest rates, right? And so what I'm going to do this week is, again, one of the most important thing with options, unlike stocks, is not what price point you buy at or what the valuation of the stock is. Really, the important thing with option trading is how you position yourself in relation to what you anticipate the movement of the stock to be that week, right? And so the better you position yourself, meaning the more buffer you allow yourself, obviously the less the return will be. But that's fine, right? Because the point and the true magic starts to happen with options is when you begin to have more and more funds. So it allows you to take less and less risk. But given that you have that amount of money, the returns really start to add up, right? So if you go for a 10% return, that's going to be a very risky play. You're most likely going to be very close to the strike price or where the option is or where the stock is trading, and it's going to be very risky. But if you go out, 5-10% out the money for the stock, then your returns significantly diminish. You're looking more at a 2, maybe 1%. But again, if you have a lot of funds, that 1% can be significant for that week. So what I want to do first is let's go ahead and look at what kind of economic news we have this week, right? This is the first thing that I look at. So I'm going to go ahead and look at this week. Filters, I'm going to clear them all. Again, I stay away from Chinese stocks. I think China is in a very weird spot. Not because countries don't go through those things. I think it's normal, especially for the amount of growth that China had the past couple decades. I think it's absolutely normal that they're going through some sort of correction. What is scary to me and scary to many investors is that they have no transparency. The GDP numbers they released, who really believes those numbers? What are those numbers based on? They don't release any sort of information around those numbers. Their COVID position is still very extreme. And this is in relation to, I believe, a flawed vaccine. I think that, they were very nationalistic in opposing any other vaccines that were not Chinese made. And I don't think that the Chinese had the correct grip on the situation. And now they're feeling the effects of it. You compare the economic responses currently from COVID around the world, and China is the only one still doing lockdowns. No other country has continued to do lockdowns. So it's a very risky place to be. That's why I specifically make it a point to stay away from Chinese stocks. So we've got now the American domestic announcements this week with the importance level of 2 stars to 3 stars. I don't really care about the 1 stars. And so what we're going to see here, the main one that we're gonna crude oil inventories. This may be important to you if you have oil positions. I don't have any oil and gas positions, so this one is relevant to me. This is really where we're going to be looking at. We're going to be looking at the initial jobless claims and the CPI and the core CPI. Now, what I like about this website is that if you actually click on it, it'll tell you what it is, right? So the core consumer price index measures the changes in the price of goods and services excluding food and energy, shows you what it was last month, what the forecast was, and then it gives you a small, actually the chart's down here. It gives you a small chart right here of how it's been the past couple years. So very important metric for us to be looking at. Now, this is really where a lot of your opinion is going to come into play, right? Given that we have this economic news coming on Thursday, the true question you need to ask yourself is, do I want to trade contracts going into Friday, right? Because again, we don't know how the market's going to react with this CPI data. And I'm not going to pretend like I know. I have no clue what the market's going to do. The market is very, very odd right now. If we have better than expected CPI numbers, the market may react very bearish because it's now even more concerned about more aggressive Fed hikes. But if the CPI number is negative or less than expected, then it just reaffirms the notion that we are in a recession. And so the market will be very bearish because, again, the market is forward looking. So it's very hard to tell how the market's going to react. So due to that reason, I'm mainly going to trade contracts up until Wednesday. The only company that I trade that does that is SPY. So we're going to go ahead and do some SPY calls up until Wednesday. And then we'll let those expire on Wednesday, and then let's see what happens. And then we won't be trading on Thursday. So now that we have that clear, let's go back to our Robinhood account here. So it seems like we're up today, which is very odd because it, one of my largest positions here, not largest, but my position here, Palantir, had earnings this morning. Earnings were not as bad as expected. Palantir has not laid off anybody, which is a very constant theme that we're seeing in tech companies. Truthfully, I was going to buy puts on this position, but after I saw how Zillow reacted after their earnings, which was completely weird, they rallied, and they're still continuing to rally. I mean, it's ridiculous. Look at this. Zillow, a company that is directly affected by the real estate market, which is arguably the most impacted with these interest rates, is a forward-looking company that has that rallied after earnings. Very odd. So due to that reason, I just decided to ride. I don't have any positions open with Palantir. I've been doing the wheel strategy on Palantir, which is pretty much writing calls on my underlying position. Last week, I wrote $8.50 calls. And if you look at where we were last week, it went all the way up to, it was rallying a lot. $8.75. I think I wrote $8.50 calls if I'm not mistaken. But in any case, the question is, what do I want to do with this position? So what I'm going to do right now is I believe in Palantir. I think the socioeconomic conditions that we're going through right now where we're obviously in the middle of a war. I think Palantir is going to excel during this environment. And so I'm actually going to hold on to these shares. What I am going to do, however, is I'm going to wait for it to have a green day. I think the market is overreacting right now with the earnings. It is down almost 10%. So what I may actually do is I may actually buy maybe $100 more of this position. Because right now this position is 9 times 500. And my cost basis is very high. I have about a $4,500 position here. So what I may do to bring this basis down is just buy $100 at 7.30, right? So let's go ahead and buy 100 shares. And it is continuing to drop. I do see that it kind of may have hit a bottom here. I don't anticipate it to go lower than 7.30. We have a 52-week low. Let's go ahead and check it out. Palantir has a 52-week low of 644, right? And if we go ahead and we look at its chart for a bit, yeah, it's not very, it doesn't have any true resistance points. So what I may do is I may actually start to trickle in a bit. So I'm going to buy 50 shares at the 7.30. See what happens here. We're going to ahead and place this order. That's going to lower our cost basis significantly. And what I'm going to do is I'm going to buy, let's just go ahead and buy the full 100. This is a pretty good cost basis. The last thing I want is to miss out on this phenomenal opportunity. Let's go ahead and do the 100 and then I'll cancel it. Look at that. It's just climbing back up. And let's go ahead and cancel the other one. So we go down here. We've got two plays. This is the $50 one. Yeah, let's go ahead and cancel this one. You know what? Let's just go ahead and buy it. We'll do a market order. Let's see where it fills. 737, not bad. Brought down our basis significantly. I try to keep my positions at a max between $5,000 to $7,000. Now, when it comes to holding positions like this, especially a tech company, I'm very hesitant because these tech companies were very overpriced. And now that we are going into a period of stabilization and forward looking assumptions, I don't think they're going to see the growth that they had before. And so their valuations are going to have to match that. But in any case, we already increased our position here to 600 shares, so let's go ahead and leave that. XXII is a phenomenal company. I'll let you do your own research. It has a lot of things in its corner. I think the next 2-3 quarters are going to be amazing for this company. Surprisingly, it's holding the boat right now. So I'll let you do your own research on it. XXII, 22nd Century Group. It is up 5% today. What else do we have here? So we have these Oatly calls that I sold. $2 calls. Oatly's at $2 right now, so those are probably going to remain like that. I do think Oatly's going to continue dropping, at which point I'll probably just sell these, buy them back, and keep the profit. What I do want to see right now, though, let's go ahead and check how the SPY's doing. So we have about $25,000. Who knows if we'll deploy the full amount? I doubt we will. But what I do want to see is we have the SPY right now 376 rebounding a bit, and so that's perfect because I do want to go ahead and sell some calls on this. We're gonna go ahead and let it rally, but if we were to see a resistance point, right, we have 377 right now. We're at 376. It did drop off from 387. Now what I do want to see is what is 5% from where we're at right now. It's about a 395. You know, I'd feel comfortable selling the 395s. So let's go ahead and see what that kind of looks like. Sell call expiring November 9th. And again, November 9th is Wednesday, because we're trying to avoid the CPI announcement. And we said 5% is 395. So that's really the strike price that I'm trying to look at, the 395s. Now the 395s for Wednesday are looking at 7 cents. So you're not going to be getting a tremendous amount of money here. But maybe what I'll do is I'll reach over to the 390s. Maybe we'll do the 393s. You know, and then we'll do the 392s here. Let's do the 393s. And then we'll go ahead and buy a call. Right there. Actually, you know what? Let's go ahead and take advantage of that. So you're really getting a $3 premium, but can we get less risk for the same premium? Not necessarily. We got $2. Let's go ahead and open up this position. Now this is what we call the credit spread. The credit spread just allows you to open a position by hedging your collateral needs by buying a call. That's all this means. Now SPY's kind of retreated a bit, 376. So I do want to track these trades and perhaps increase my positions as we go. I can't buy one that I already have a short position in. Okay, so let's go ahead and do it a little bit lower here. This one's a little bit more aggressive. Don't anticipate the market to rally, quite frankly. But for this one, I do want to remain a little bit more cautious. I don't mind taking these kind of risks because, again, I amplify these risks tremendously. Alright, so we put in a couple limit orders. Now what we want to do is just wait for them to be filled. You don't want to ever chase a trade. You do want to let the trade walk into your position. So I have these open right here. As SPY increases, these will begin to get filled. I don't think we have any already. Now, let's see what other things are going on here. Meta's up 5%. That's interesting. People think it's extremely oversold, which may be the case. Fundamentally, I just don't believe in the company. Great place to sell options, though. Ford, I had a very interesting position with Ford. Now, car manufacturers are affected a lot by it. What I like to do with Ford is I just like to sell naked puts. And the reason why instead of credit spreads is because it allows me to just roll them if I do ever get put in the money. Right? So right now we're at 1348. I may sell a put for $13. It'll give me 13 cents. I don't anticipate Ford going below that. You know, we do have a 52-week low of $10. I think Ford's electrification part, you know, how their electric vehicles are coming out is phenomenal. Look, they have a weekly low of 1305. They have a monthly low of 1127, but they've been pretty, you know, stable going upwards. So I may do that 13. I'm a little concerned because of the CPI figures coming out, so I may actually avoid it. And look, sometimes the best trade is not to trade at all. That may be your best trade. So remember that. Now, it doesn't seem like any of our SPY options have filled, which is fine. You're not chasing a trade here. I'm going to go ahead and refresh this just so we're sure. Doesn't seem like we've made any trades here. Seems like XXII is carrying our day today. And if I want to just for you all to understand that, this is our small account challenge. We're trying to get this account to $100,000. This was started about in April, so we're almost out of 7-8 month time. Just this past month, we squeezed about $8,000 out of the market. In the past 7 months, we squeezed out about $23,000 out of the market. This account was started with 16. So if you guys want to join me, I do these live tradings, not too frequently, but I do them to just show how to actually implement everything that is taught on my channel. If you have any questions or concerns, feel free to comment. Now, let's go see what's going on with SPY, because none of these are filling. And my trading is usually between 9:30 and 11. That's usually when I do my trades. I don't trade after that. Alright, so we are currently, it's up 0.14. It seems like it's just pretty stable right now. It hasn't really done much. None of these have filled. What I do want to do maybe is take my less bullish positions, or my least aggressive, which would be these 394s. These are at 2 cents and they haven't filled. Maybe I'll do the 392s. These are at 3. Let's see if we can get these filled at 2. Yeah, that's probably what we'll have to do. And again, these are at $20 for $1,000 on that risk is an amazing position. Alright, so let's go ahead and see what we just did here. So we just got filled 392s. So the first thing I want to do is I go to the 392s. Okay, and I do chance of profit is 95. So let me input my trade here. 95, what? 75%. Here so you guys can see. Today is November 7th. We're gonna be doing a SPY trade. Okay, and I'll fill this out later. I just want to make sure I have this position in there, because my cost basis may switch around a bit. Now, this one's already at 4. You see, that's why you don't really want to go all in on your position. I'm gonna do another 20 here at the 4. And so what we just saw here is, remember, the collateral requirement is the difference between the two spreads that you're getting. So 392 and 393, we have $1 times 100, which is a contract. That's $100 of collateral per $2 that we're getting. So if you look at that on a percent basis, that's a 20% return. You're getting $2 for every 100 that you're spending. That's an amazing for holding this position 2 days. I'm sorry, 2%. So you're making 2% on a fairly risk-free position. Okay, because what are the odds that in the next 2 days, given the economic situations, that the SPY, which is a composition of the largest companies in the US, will rally that percentage over 5% in 2 days? Very low. So that's why I feel very comfortable taking this risk, right? And so right now it's valued at 3. We do have 392, 394. Let's go ahead and cancel these 390s. We may do a small position on the 390s, but we do have the 392 open there. Let's go ahead and cancel these 394s as well. And this is really the idea of option trading, is positioning yourself in a very safe spot and just collecting consistently premium. Palantir is kind of holding at 734. That's interesting. 10 credit spreads. You know, I do want to make sure, given that the decay on these options is very quick, I like to take advantage of these positions. That's a fairly large position there. I have a 3 here ready, a $3 per share waiting to fill. So if it ever does get to that, which it says it is, but it hasn't filled, so I'm a little hesitant. But I always leave it here. So we're at 30 right now. You know, we've collected what, $60 of credit. That's not bad. I want to collect at least $100. I'm very cautious right now just because of the CPI numbers. That's a big figure that we have. I may do a naked put on a company that I believe won't be affected as much or may be positively affected. Quite frankly, TJ Maxx has performed amazing during these past CPI hikes, and so what I may do is I may sell a put on it. You know, if you look at it here, it's kind of been pretty stable. It does have a downward trend here with a high of 71. So let me see if I can do a, you know, November 11th, sell a call, 70.80. I do want to go ahead and see something here for TJ. Now the thing with TJ is that it's a, you know, things are very tight with TJ. TJ has humbled me several times, I'm not gonna lie. And so if we look at the TJ chart right now, it did have a rally, which is good because the odds of it going above that is low. It is trading above the Bollinger Band average. It's trading above your 60-day. It's trading above your 200-day. So it does have a fairly strong base here at 68. So if we wanted to sell At 68, it'd be interesting, but again, I'm very hesitant mainly because of the CPI. But if we do a naked one, it may not be as bad. So let's go ahead and see what we got with the 60. Oh no, 60 sell a put. Oh, okay, so it's at 70.88. We said 68, right? So maybe if we do 2 at 21. How much collateral though? That's gonna require, look at that, the amount of collateral for this position, for this amount of money. I don't know if that's necessarily worth it, to be quite frank with you. $42 for $13,000, 400 collateral. That's 0.3% return, so it's not great, but the risk is very, very low. Maybe what we'll do is we'll do a naked 68, and we may just do one, so that way 6,868. My concern again is the CPI numbers, because if those CPI numbers come back very aggressively, earnings are November 16th. People will be pretty bullish for the earnings. May not be a bad trade. I may do a put on 68. And let's see if it fills at 40. It did. Nice. And 68 has its chance of profit is 81.44. So we're looking at 81.44. TJX. Remember, nice and slow, wins the race. That's the key with these. Alright, so now that we're there, we've got our SPY positions open. Oh, look at that. It filled at the 3. Now it's at the 4, so we may increase it. What do we have here? 50 times, we said 100. So this is already a $5,000 position. I may open a couple more. I may do another 20 at the 4. And let's see what happens. If it fills at 4, great. If not, whatever. TJ, we've got that naked put. It's continuing to go up to 43. That's fine. Oatly, 42. Okay, these are fine. We've got $11,000 pending. Now, what we can do with the SPY is, I'd hate to buy a put, though, because it's very concerning. What's another small stock? I mean, Ford again would be an interesting put to buy. The 1350s are trading for. Are we expecting a rally? I don't know if I would do that trade. Microsoft has had a pretty rough week. It is up today. It had very good earnings. I may sell a put on Microsoft, to be quite frank. Seems like we had a low of 214. So I'm probably going to sell a put right below that because that's a very, very strong support. Let me just verify that with my chart. So if we go to MSFT, right, you can see it is on a downward trend. The question is, will it go lower? Right, this is 214. It is starting to come back up here, and maybe we'll see a small rally. I feel comfortable taking that trade. I may go right below it. Let's see if there's a I mean, that is a 52-week low, so we can actually go right here. You know, we'll do the 225 times 0.10, so that's 2250. So if we were to do a 10% drop for the week, assuming it drops 10%, which the odds don't seem like that, it would be a 202. So if we're looking at the 205s, I like these 205s. You sell a 205. So what it's telling us here is that we're selling a 205 for 24 and then buying a 207 for 36. Doesn't really make much sense. These chains are a little weird. So let's go ahead and see what other sell a put here. A 210. Oh, it's because I was buying it closer in the money. See, now this is a very good play here. For $250, we get 8% collateral. I mean, $8 premium for 250. You know, I mean, I may do it. Sell a put 205. Oh, I may do. You know, I may open one up here at 7. See if it locks in. Even if we were to do it at 7, so at 7 it locked in at 250, right? So that means we're getting a 2.8 return in 1 week, assuming Microsoft doesn't drop from 225 below its 52-week high into 205. I do feel comfortable buying a couple more of these at 3. Alright, so we do have 10 here at 3 cents a share. We have 20 here at 4 cents a share in case it creeps up. We have our Microsoft credit spread still pending to be open at 8. Right now it is at 8. So we are waiting. Let's go ahead and do 3 at 0.7. Let's go ahead and do 5. Okay, there we go. Letting it fill. One filled. Let's see what other fills up here. And then what I like to do is I don't like to deploy all my capital at once. I may check in tomorrow if I still feel comfortable about the trade, but obviously the trade is not going in the direction that I want it yet. That contract will be more expensive, so I increase my position, which means that my premium will increase. So that's why it's always good to keep some money in your back pocket here. Let's go ahead and wait for these to fill, and then I'll probably call it a day. It's already 10:30 a.m. SPY 3, Microsoft's at 8, climbing to 8. So that means our 7s must definitely fill in here. I've got one of the 5. I'm gonna head to the bathroom real quick. Alright, I do want to input our Microsoft 205 trade. Let's go to Microsoft here. What's Microsoft's ticker? Mother of God. Alright, so we traded the which ones? The 205s, I believe, right? We sold a put November 11th, and we sold, and this is really the important leg, the short leg, the one you sell. The long leg, the ones you buy, is just the hedge. These are the important ones. We've got 94.85. So we go right here, 94.85. Oh. Microsoft, is it? MSFT. Alright, so we'll leave these in there. Seems like our Microsoft's got one to open. We've got 6 right now, and it's at 7. So I definitely want to do 5 at 8. So I'll leave the 8 there for that to fill once it reaches that price. And then currently I'm going to do 4 at the 7. Oh wow, it's already at 9, so let's let the 8s fill for a bit. You see, we've got the 5. The SPY, it says it's trading at 3 cents. But if I look at it right now, I've got... Oh, I do have 3 cents. Okay, so I have 10 open for the 3 cents. We'll let that one fill. I've got 5 open for the 8 cents here. Let's go ahead and do another 5 at 7, just so we can get at least 10 on the 7. Okay. Alright, so we'll let these fill. We've got a pretty good amount of positions here. TJ's gone up in price. You see, so that's why it's very hard to time it. So that's why it has to make sense for you. We got $40 for it. It's at 47 right now. I'm not worried about this at all. We're at 70, 68. Worst case scenario, we roll that back, or we just get assigned. You know, we'll hold TJ at 68. That's a phenomenal company to hold, especially during a recessionary period. If People are looking for bargains. People are looking to pay less. Brands are looking to offload. And that's exactly what this company does. Another good company is Costco. Let's just see what Costco's doing, just out of curiosity. And again, these core positions are the main ones that I trade. I know these stocks like the back of my hand. I've been trading all these primary core positions. Now Costco yearly, we see a low of 416. We do see the week was on a downtrend. The month was on an uptrend. And it's starting already on a downtrend. So if I was to open a put position on this, I'd more likely than not do it below the 449 line. If I could, and if it made sense, I'd do it below the 416 line. Out of curiosity, let's see what the 416s look like. The 415s at 6 cents. That's not bad. We said the 52-week low was, let me look at the chart here. So if we go to Costco here, right, we see that it had a low of 406. It was on an upward trend. It's currently on a downward trend and I'm going to go ahead and let me see if I can extend this. So you see how the downward trend was confirmed here again. Here it broke off, and then here it rallied, came back down. It seems like we have a good support at the 450s. I would even reckon 446. So really anything below 446 I would feel comfortable writing a put on. So 446, $445. Let's go ahead and start it right here. Sell a put, collect 3 cents on that for every 500. Let's see, can we fill at 0.08? Can we buy at 0.606? Can't buy an option that I have a long position in. Let's see, did it fill? No, we still have this credit spread here. Now we put in 8. Is it trading at 8? It's trading at 4. Let's see if we can get $5 for it. Okay, we got 5. These are the 435s. Why isn't it coming up here? 96.73. And let's go ahead and we can increase that position we have here. So it's currently at 7. We got 5. So let's see if we can open up at 7. We'll do 2 at 7. Nice. So if it filled up 2 at 7, that means we can do 2 at 8. Okay. And so again, Costco, right? We just got $7 for $500. So you're looking at a 1.4% return on Costco not dropping below 435. And I'm going to keep this position light on purpose. Probably keep it to $2,000 to $3,000. Let's say we do $3,000. You know, it's 6 contracts. So right now we're at 3. It says it's trading at 8. I may open one at 7 just to lock in that basis and increase it, and then I'll let the other 2 8s fill in. Not even 7, wow. Alright, and so I'm going to go ahead and conclude this. Right now I'm going to let these positions fill if they get there. If not, they'll just close tonight. I do want to let the trades kind of trade into the trades, if you will. Everything else looks good. We've got this rallying. Palantir is taking a good hit. It's continuing to drop here. 722. Honestly, if it continues to drop further down, I may increase another 100 shares just to continue decreasing my cost here. But I am fairly down on this position. Now, I have been wheeling this stock now for a couple weeks. So this loss right here is not a complete loss. But it definitely is a loss. So it's something that I have to keep an eye on. Lesson learned is when you see the trend, when you see tech stocks taking a beating, it's better not to hold a tech stock. Alright guys, so that's it for today. We will check back in next week. Just real quick, based on my last week's live stream where we went ahead and opened up a couple of these positions, it seems like the majority of them printed. Only 2 positions that were in the negative, and again, mainly because I was trying to mitigate any losses. They got fairly close, but had I let these run and not even opened my trading account, all of these would have expired worthless, meaning we would have made 100% of the premium. Last week we made 798. It was a 3.5% on our collateral, so on the collateral that we used. The week before that we did a 3.2%. Week before that we had 6.5%, 1857. So, you know, we're doing fairly good. Consistency is what wins the race. So make sure that you don't get blinded by trying to squeeze as much money as you can out of the trades. That's not the right way. You may make a lot of money 1 week, 2 weeks, but then you lose it the week after. The key to trading and to having your account grow exponentially, you know, 170% returns in 7 months, is to be very, very, very risk averse, right? The key here is not how to make money, but how not to lose money. And these mindsets, I'm going to do a video specifically on the mindsets required for option trading. Go ahead and leave a comment on what you would like to see. Please like and subscribe. I appreciate you all. Thank you for tuning in. My goal here is to help you guys make money off your savings or off of any money that you have disposable. You can start with $500. You can start with, you know, $100. And then from there grow it. And this is not something that happens overnight. This is something that does take time. But once you start getting into these sizes of funds, you know, this is, what are you going to do with this kind of money anyways? Would you leave it in your bank account and it collect 1%, 2%, 3% a year? When right now, conservatively, we're achieving that in a week. So it's just something to open your eyes up to. I'm going to continue making these videos to help you. If there's something you want me to cover specifically, go ahead and let me know. Thank you guys. Peace.